the Bank of England, Melvin King, said that banks may be forced to start lending to businesses and families from the billions of pounds they've received from the taxpayer. He was speaking before a committee of MPs the day after the government unveiled a £20 billion package of measures to kick-start the economy. Here's what he had to say.
We have to monitor, we have to ensure that the financial markets themselves are not putting too much pressure on banks and allowing that capital to be used to absorb losses. We'll need to put further capital in if necessary, and in the last resort, you can't rule out measures where the government would have to intervene directly to ensure that that flow of lending continues. The banking system is too important just to be left.
Well, our business editor, Robert Peston, is with us now. Interesting what he had to say. Also, can he force, or can the government force the banks to lend?
Well, they do have tremendous power over the banks right now. Not only are we injecting, that's taxpayers, injecting colossal amounts of capital into three banks, HBOS, Royal Bank of Scotland and Lloyds TSB, but 500 to 600 billion pounds of our money is being also provided to more or less all the banks in the forms of loans and guarantees. Frankly, our banks can't function without our support. So it is true that the government does have the ability to say to the banks, look, you know, we've helped you out. You know that you're going to continue to need this help for some time. So if you don't do more to help struggling families, help struggling businesses, then you're going to find yourself in a spot of bother. So yes, I think that the government does have let's say some levers to pull here.
Okay, and how does that work given that we are in this global economy?
Well, the problem is a very, very profound one. I mean, let's be absolutely clear. What is slowing down not only our economy, but the economy of many, many countries, most countries across the world, is a shortage of credit. What's happened is banks, other lenders, provided too much credit. The other side of it is people, all of us, businesses, have borrowed too much. There's been a sort of realization about the extent to which there's too much debt around the place, and banks are therefore trying to get those debt levels down. And it's not just happening here, it's happening all the way across the world. So there is a risk here of forcing the banks to lend more in the UK. If they're forced to lend more in the UK, chances are, because these are global institutions, they will lend less elsewhere. That could cause tremendous problems, actually, for borrowers, funnily enough, elsewhere, which could then feed back into losses here. So in a way, although there are things that the government can do to sort this problem out, actually on its own, it can't, I'm afraid, solve this phenomenon, which we all now know by a very simple name, the credit crunch. It means what it says, too little credit around. I'm afraid we're going to have to live with this big problem for some time yet.
Okay, Robert, thank you. Well, the political fallout from the pre-budget report continues as well. The Conservatives are accusing the government of being reckless in its borrowing and are demanding a full debate. The Chancellor is hoping his 2.5% cut in VAT will lead to an increase in consumer spending. Richard Scott has more.
Chancellor, is this going to work?
Depending on who you believe, it's either a budget that will steer us away from a severe recession or one that will saddle us with huge debts and hamper economic recovery. The Chancellor is adamant that he's done the right thing.
There is a choice here. You could have decided to do nothing. You could even have decided, okay, in the face of all this, let's, go around cutting spending and everything else. It would have had a very bad effect on the economy. People would have paid for it. We've been here before when the same people were arguing the same things 20 years ago, in the 1980s, for example. I'm not prepared to take that risk.
Of course, the centrepiece of yesterday's report was that 2.5% cut in VAT, but there are doubts about how much difference that will actually make. If the retailers pass it on in full, then it will make many goods slightly cheaper. But will consumers spend more as a result, or will they just save that extra money that they find in their pockets?
I don't see it made any difference at all. 2.5% on not a lot for me, doesn't make any difference. It won't make me spend any more.
It's only sort of 2.5p in the pound.
Money's tight.
The money's tight anyway. We're still watching. We've still got, bills coming in, electric, gas, and everything coming in, so we're not going to spend any more.
The Tories argue that the level of debt we're being forced to take on to pay for those cuts, next year will see the highest borrowing since modern records began in 1970, is just too high.
fix the lending system, get interest rates down, help people through this incredibly difficult recession that the government have led us into, and then don't destroy the recovery with a tax bombshell which involves a big national insurance increase.
That rise in national insurance contributions, together with a new 45% tax band, is part of the government's plan for paying back the debt. It depends on individuals, but generally only those earning more than £100,000 will really lose out. The government thinks the economy will start to recover in the second half of next year, but others aren't so sure.
Figures are terrible. They're actually rather optimistic. I mean, they do assume that the economy recovers in just over a year's time. They assume that public expenditure will remain under control. They assume there'll be all kinds of efficiency gains. If those things don't happen, the position is even worse.